Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Frank Gannon, Co-Chief Investment Officer at Royce Investment Partners, to discuss why investors should be optimistic on small cap stocks. Frank, it's great to have you with us. Welcome back to Trade Talks.
Great to be with you.
And you're seeing 5 reasons why investors should be bullish on small caps, 3 of which are present and 2 others that might not be as forward-facing. Let's start with the 3 that are in front of us right now.
Well, I think one of the more interesting things to think about is many of the market indices have gone on to hit new highs. The small cap market, the Russell 2000, has not. In fact, the Russell ended the third quarter of this year down over 10% from its previous peak, which was August 31st of 2018. Even though the market has recovered some 53% from them, and probably through today's trading, we're going to be down about 5% from our peak, we still think there's room to run. History shows us that from the bottom of recessionary markets, which we had in March of this year, you have significant room to run, and more than not, the index goes on to hit new highs, typically 55% above their previous peak. So that would tell you that small caps have a very long way to go.
And what about the other 2 reasons that might not be quite as forward-facing, but certainly aligned to the investment thesis here?
Another really interesting thing about small caps right now is we just completed what I would call a multi-year period of low performance for small caps in general. In fact, we've identified it and called it 3 under 3. At the end of the third quarter of this year, the Russell 2000 for the 3-year period had returned only 1.8%. Typically, the number is close to 10%, or if not better than 10%, if you go back and look at those 3-year periods throughout the life of the Russell 2000 index back into the late 70s. And what's interesting about that is not only are you having this low period of returns for the Russell 2000, but typically subsequent to these low return periods where you've seen 3 under 3, which has only happened in 14% of the time. If you go back and look at the Russell 2000 over the 40-year history, what happens of this subsequent 3-year period is you have annualized returns of greater than 17%. So you're at a unique moment in time right now where we think actually that you can see small caps start to do better in a market that has only been focused on the largest of the large.
So then, Frank, where are the opportunities within the small cap space?
Within the small cap space, I think as the economy continues to broaden out, and I know we're going to be getting that GDP number for the third quarter on Thursday this week, but as the economy starts to broaden out, you're going to see more and more sectors of the market participate. You ended the third quarter this year seeing cyclicals at a 20-year low on relative valuation to their defensive brethren, something we hadn't seen in a very long period of time. So the opportunity, I think, within the small cap space is in those more cyclical areas of the market. People have flocked to the defensive areas, but the cyclicals, especially as the economy starts to broaden out, you're going to see the cyclicals do much better. So think railroad, think construction, think housing, think of all those machinery businesses that support those different parts of the overall economy. Even with the amount of uncertainty we have right now, you are seeing very strong pickup in certain pockets of the cyclical businesses across the country. I would also tell you that I think what's really interesting that's going on right now is you're in the middle of the earnings reporting for the third quarter. And as that continues to unfold, I think you're going to see more strength and a broadening out of the small cap marketplace, which I think is really exciting.
And of course, Frank, to wrap up, the election impact on the thesis with small caps gaining some strength there.
Well, I think the election impact right now is just about volatility. You'll probably see more increased volatility going into the election and even potentially after the election. But over the long term, it's the economy, I think, that's going to play the bigger role here, especially for small caps domestically in the United States. And so what I think you'll see going forward is earnings continue to broaden out, the economy to do better than people might be anticipating, given all the uncertainty.
All right, Frank, appreciate the insight. Great to see you.
Thank you very much.
All right, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.